Morning, Steve Free in Chicago with the grain comments. As far as the markets are concerned, we've turned a little bit lower. Beans down now 4 cents, corn down 3, wheat's anywhere from 2 to 6 cents lower. We've got crude lower, and financial markets are kind of watching to see what the Fed comments today is about tapering and interest rates. As far as new news, there's not a lot of new news out there. U.S. weather will be dry over the next couple of weeks, which should help harvest. We'll also be looking at some showers developing in the Black Sea over the weekend. Europe has seen some rain, which has slowed the corn harvest there, rallied prices for corn, but it might be drying out, especially in the northern areas. In South America, weather is good. We had Brazil soybean plantings at 52% done. It's up 20% from last week and compared to 42% last year. That raises talk that there could be some soybeans available for export the month of January. It gives us very little time to reach some of our export goals in beans, especially to China. Matif and Canada rapeseed and canola futures continue to make new highs. Long term, I think the bean market has got to be watching how much China is going to buy, what the USDA report is going to say, and then also if the crush goes higher because of increased soybean oil for biofuel, what does that do to the meal market, and where do we put all the meal? Corn has had a 80-cent rally in the last 3 weeks from the October lows. Yesterday, we heard that maybe some of the funds that were buying corn are done for a while, and that farmer selling increased at Monday's highs. Matif corn is still making new highs, and we noticed that Brazil corn is now 73% planted in their first crop versus 64 last year. Ocean freight continues to drop. It's down about 65 cents on capsize since last month. And that might be an indication of lower trade, lower demand. The Matif wheat market made new all-time highs before backing off a little bit on this weaker tone here in the U.S. Black Sea wheat was also higher. And so we're looking at funds long about almost 50,000 beans. They're short 26 meal, long about 80,000 oil, 276,000 corn, and pretty much even in the wheat market. So we would contend that farmers should increase cash sales from the 21 crop, begin the 22 crop, and even the 23 wheat crop at these price levels. So USDA report could be a little negative, and we have to watch pretty closely. And if there's not a weather problem in South America, beans are overvalued. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.